Hi everyone, we are back. We're now on episode 2.
Mortgage 101.
Yes, Mortgage 101. And today's topic is down payment. So Gary, typically how much down payment do you need in terms of percentage to buy, let's say, a $1 million home?
Typically, the minimum down payment guideline will be 10%.
Oh, that's it?
Yes, so 10% is actually the default mortgage insurance company, which is insured by CMHC. So under 20%, it will be an insured mortgage.
But is there extra insurance that you have to pay to CMHC?
Yes, there's a certain percentage that you need to pay as the insurance premium. It will be added to your mortgage in the whole term.
Ah, okay, I see.
Yeah.
So for example, if you're buying a $1 million home, the 10% will be $100,000.
Yes.
So, and how much income do you need to qualify?
So let's say if you're purchasing a $1.1 million home, then you need to qualify for at least $900,000 of mortgage, right? That could be a lot. And then typically, I would say you need an income like 5 to 6 times, so that will be around like 130 to 150.
Oh, 130 to 150,000. That's like combined husband and wife together?
Yes. So let's say if the husband is making like 70,000 and the wife is making at 70,000, so that will be $140,000 income to qualify for the $1 million property.
So is that your net income or gross income?
That is actually your gross income.
Oh, okay. So if somebody's self-employed, they just look at the gross.
Okay, if someone that is self-employed, they don't look into the gross.
So going back to the amount of income that you need, to qualify for $900,000 mortgage, you mentioned it's $150,000 household combined income.
Yes, that's correct. So the minimum guideline for the bank that you can actually do 30 years amortization, I would say usually, typically it will be 20% down payment. So it will be $200,000. A lot of times these down payment actually come from personal savings, come from gifted funds from family, let's say parents, and also a sale of property. Okay.
Another question, can it come from RRSP?
Yes, it can. So to a maximum, RSP, you can actually take up to $35,000 from RSP if you're a first-time home buyer.
Okay, I see. So earlier, I asked you about if you're self-employed like myself. I'm self-employed. So what does the bank look at? Does the bank look at gross income or net income?
So self-employed is a very, very big topic that we're going to talk about in episode number 3. Okay. So in general, I would say self-employed because there's many different types of self-employed. Self-employed, there's commission income that we actually call self-employed as well too, but you're actually still getting paid by a company. Some of the self-employed, actually you have your own company or only, but then you actually don't have any employees. Those are self-employed as well too. And there's also self-employed that you have only one company and you only partially own, and then you have like tons of employees. And then that we have to look into the situation like individually.
Okay, so if my down payment is higher, what is the amount then I don't have to pay CMHC?
If your income is higher,
like if
20%.
If my down payment is higher, 20%, right?
Yes.
So if I have a down payment of 20%, then I don't need to pay CMHC anymore.
Yes.
If I'm borrowing $800,000, what does my like combined income need to be?
Then that will be, I would say, still it will be a tiny bit lower. I would say 130.
So just $20,000 less.
Yes.
Today is September 20th.
Yes.
And what is the current mortgage rate right now?
Well, the current mortgage rate for variable, we're looking at close to 5%. Okay. So, and for fixed rate, we're at around like 5.39 to 5.59 again.
And do you recommend somebody get like a 1-year open mortgage, and you know, perhaps maybe the interest rate will go down next spring and then lock it in next spring? Or
well, we always say no one has a crystal ball. We really don't know about the situation, like how interest rate is going to be for the next year. Can we really control inflation with increasing interest rate? If they cannot control the inflation next year, and they have to keep increasing the interest rate, if the client becomes like 1-year open, that they can open to a lot of risk themselves.
Oh, that's right. That's right.
Yes.
So I think a lot of people were caught, like nobody knew there's such a sharp increase in such a short time, especially those that are having variable mortgages. They now are seeing, you know, by the end of this month, they now are seeing an increase in their payment.
Yes.
Right.
So depends on the situation. Let's say we have like clients actually they have a family. They're actually buying a house, right? They actually have no problem. Like they will not be switching to a new place anymore. They will be living in the house for at least like 10 years, 20 years. Then I'll recommend them, if interest rate keeps going up, it might be better for them to go with a longer term fix. So they just need to worry about the payment every single month. They don't need to worry about interest rate increase.
So, this episode we're talking about down payment. So suppose somebody have more down payment. Do you recommend them like put 40-50% down and then the other amount? So say for example, I save up like 70,000, or sorry, I have this down payment 400,000. Should I spread it into 2 mortgages or pay into one lump sum? Like, should I buy one investment property and then buy one principal resident with the split, since I can
Qualify for more?
Yeah, would that, do you suggest that?
So it depends on the client situation again, right? Some of the clients, they actually prefer to have one property for themselves to live in, so that like they don't really need that much space. Let's say they're like a single professional, like I have a lot of money, and then like they just want to put like one in primary residence and then like one in your investment property. That could happen as well. But some of them, they try to put a majority of the down payment into one house, because like real estate in Vancouver is quite expensive already. Yeah.
So it depends on the client's
Yeah. So when you actually talk about like a big down payment, so we always actually see that like sometimes like clients, they have like a bigger down payment, like let's say 500,000 or like over $1 million, right? But it really depends on the age. The bank actually requires a minimum 90 days history of the money showing that is yours. Okay, that's very important. If it is gifted by your parents, then you actually need to show that on your parents' history as well too. So a lot of clients actually, when they actually starting to look into properties, they haven't thought about the down payment at all. So it's very, very important. You need to get not only the income documents ready, but you also need to get the down payment ready. The down payment should be in your bank account so that we don't have any problem. So I'll give you one scenario. We actually have a client that actually just wants to pay $1 million into purchasing a house, and then they just need a mortgage for $1 million. The purchased property was only $2 million. Okay. However, they always think the parents has $1 million ready. It is ready. It is in a GIC. However, the GIC was locked for 1 year fix.
Oh no.
Yes. So it was only like 5 to 6 months in the term. We have to look into that situation, because it could be very difficult when you actually lock in for a GIC term while we're seeing interest rate like so high right now, and you're trying to take that as a down payment. That might be like penalty that you have to pay. You might be losing interest for like the months that you have been going on, right? And then you actually don't want to lose that much interest, because think about $1 million in GIC. If you're actually getting a interest rate for GIC for like 3.5%, that's like $35,000 for a whole year.
Yes.
Then if half a year and you're losing all that interest, that can be 17,000 already. So it could be a lot of money.
So, but there's something shorter term GIC that we're locking in right now because interest rate has gone up.
Yes.
The other day you mentioned to me is 2 months, right? 2 or 3 months.
Yeah, there's like 60 days, there's 90 days. So remind the parents, I would say, when you know that you're actually getting a bigger down payment from your parents, then I'll say that like remind them, do not lock it in for a very long-term GIC. Otherwise, there will be a lot of trouble. Right. And make sure you actually know the maturity date. So when you know the maturity date, then you actually be able to decide your closing date as well too.
And I have sometimes overseas clients, and their money is from overseas. So the money need to be like wired over here into the bank account at least 90 days before the mortgage got real approval, right? So, say for example, they have a statement from the Bank of, China, right? It's a statement that has a $1 million, but that money is not in your Canadian bank account. Even though it shows up, but somehow it has to be wired over here into your Canadian account. Am I correct?
Yes. I would say in typical, when we're actually doing mortgages, we just want to make sure the money is yours, which is not borrowed from another person. So we actually require a little bit more documents, not only 90 days. Sometimes we actually want to see the tracing. If it's like $1 million, then we actually see like, where is it coming from?
Right.
Is it from a sale of a property back in, like for your parents, back in another country? So doesn't matter where, but then there should be some sort of proof that you sold your property, the money is overseas, and it's coming to Canada, and then now it's in your bank account. So we actually have to prove all that before we actually proceed with a mortgage. Otherwise, if your down payment is not ready, might not be able to get a mortgage as well.
Right. So is there something like pre-approved? Like, okay, I show you my statements from overseas and this is what I have. But is there a tentative approval? It just takes me my money to be shipped here. And once it's here, is that the official approval? So how does the approval work when your money is not in Canada?
So when your money is not in Canada, basically we just recommend you to actually get the down payment ready, because you don't want to put an offer without your down payment already in your bank account.
So
Right.
your money needs to be here.
Yes.
Oh, okay.
Yes.
Okay.
That will be the safest for sure, 100%. Yes.
That's why it's always taking forever, because moving money from overseas takes a while.
Yes.
Yeah.
Yes.
Okay, so that's on
The down payment.
down payment. Any questions? Comment below, subscribe, share, and we love to hear from you.